All right. Welcome to BioVerse episode 17, the recap of JPM 2025, the news, trends, sentiment, and we just added one more, the China trade. Good day, depends where you are, especially for those in the West Coast. Right now, just 9 a.m. We change our time to accommodate people who are still working hard in San Francisco. So that's gonna feel very at home. For people who ventured out until I guess in China already 1 a.m., we applaud you. Anyway, before we get started, let me just first give the new attendees a little bit idea who we are. So let me just share a quick slides. And my speakers, please give me a thumb up if you can see my screen. You can see my screen? Good. How about now? Still not? Wonderful. This is a BioVerse episode 17, recap JPM 2025, news, trend, sentiment, and China trade. A little bit about ourselves. So BioVerse, where science sparks business in medicines, is really started by in Science We Trust community, I3 community, but now it's being produced by 3 US-based nonprofit, really serving the Asian biotech biopharma communities. The first one is ourselves, I3 community, which is a nonprofit, founded a few years ago. Right now, BioVerse is really our flagship program. On average, attract 12,000 live attendee per episode. And you may wonder, that I didn't say 12,000 attendee in the webinar today. Don't worry, because we're gonna do replay with another 8 platform. They all together is typically around 12,000. We have a newsletter. We have more than 2,000 active members. That's us. The second one is the SAPA GP, Central America Professionals, Pharmaceutical Professional Association, Great Philly chapters, one of the oldest ethnic Chinese American focused pharmaceutical associations. The last one is a Boston-based nonprofit, really focused on biotech and early stage drug discovery, as well as a lot of business aspect. And the BioSpark funded about 6 years ago. Now, although majority of the members around Great Boston area, they do have members across the world. With that being said, I would like to invite each speakers from left to right to spend up to 1 minute to say hi to our audience and also give a little bit of introduction of your background. Please go ahead, Faye. I guess you're going to be the first.
Thank you, Leon, for inviting me. My name is Faye. I'm a partner at Panacea Venture based in New York. Panacea is a traditional life science venture fund. We spun out of Kleiner Perkin about 8 to 9 years ago, and we invest globally. We're actually one of the first funds that believe that innovation comes globally. So we source innovation everywhere and operate them globally. So right now we have about 65% of our portfolio in the US, the rest in Asia and Europe. I'm a physician by training. So thank you.
Fantastic. Biren?
Yeah, thanks, Leon, for inviting me. My name is Biren Amin. I'm Managing Director in the Biotech Equity Research Group at Piper Sandler. Piper Sandler is an investment bank headquartered in Minneapolis, and we have a sizable presence in biotechnology and therapeutics from not just investment banking, but our Piper Heartland investment fund. And just a background myself, I've been at Piper Sandler for close to 1 year, and before that was CFO of 2 companies in small molecule oncology. And before that, spent 17 years on Wall Street. So thanks, Leon.
Fantastic. Weiyong?
Good afternoon. Thank Leo for inviting me to this panel. My name is Weiyong. I joined the Hansoh Pharma March 2021 as the Chief Business Officer, responding for global BD development and asset management. And before Hansoh, I worked for Daiichi Sankyo for 19 years, and 5 years in Tokyo R&D Center, and 14 years in the US corporate BD division. Hansoh is a big pharmaceutical company in China with more than 9,000 employees. We have more than 30 programs in clinical stage and hundreds at discovery stage. Thank you.
Wow, wonderful. So last but definitely not least, Naveen.
Hi, everybody. Thanks for inviting me. My name is Naveen Krishnan. I'm the managing director of a group called Mirae Capital Life Science. So Mirae Capital Life Science is a U.S. biotech affiliate for Mirae Asset, one of the largest global asset managers in the world that manages over 600 billion of assets. And we launched in 2023 with our first fund and investing in biotech companies from that fund. My background, so I'm a physician by background. I have experience in drug discovery, and also I was in venture capital, at least by Bayer before Mirae Capital Life Science. And before that, I was an operator, built a few companies, public and private. Yeah, nice, based in Boston. Nice to meet everybody.
Fantastic. So now I also need to give a little bit shout out to our sponsor, Wells Fargo Private Bank. Thank you so much for supporting us. In the meantime, I also invite all the other sponsors, companies, service provider to help us. We are a nonprofit. Your support is gonna make us do more meaningful work. And also, I personally really appreciate the advisor from Wells Fargo offer actually meeting location for me in San Francisco. They have a really nice office, I have to say, very spacey. So definitely contact me if you want to learn more about what they have to offer. All right, so the introduction out of the way, there's one more logistic reminders. Because this is a JP Morgan investment, there's a public market, a private market, there's probably some confidential information. If the audience have a question, we really encourage you to ask during the webinar. However, please only put a question in the Q&A box. And when you ask a question, please identify your company and yourself so we can avoid any unnecessary conflict of interest. We don't want any of our speakers run into a compliance issue as they are from highly regulated industry. Again, Q&A box, identify your company and yourself, and please ask as many questions as possible during the webinar. All right, I guess we clean. Let's get into the list of questions the speakers and ourselves has been discussion. I'll start probably with the first questions really about the public investment market. And so, as you know, the question really about what are the overall trends in the public investment market, particularly in terms of disease area, development stages, and the perspective on the overall market, such as DRG, as you know, as an index of large pharma, and XBI. So probably since we have a sales analyst, Biren, on the panel, I'll start with you, Biren. What's your take it from here?
Yeah, thanks, Leon. So maybe let me just start with the last question first in terms of trends on XBI and what we've been seeing in the last 2 weeks, as well as the last few years. It seems, XBI has clearly underperformed S&P over the last few years. And I think some investors are hopeful that this is the year that we see a breakout. And as you know, Leon, we were talking, JP Morgan had good weather. So hopefully that, is a leading predictor of, the breakout in XBI. And I think more seriously, though, some investors will say that, we need M&A to come back in force for XBI to go higher. In fact, first day of JPM, J&J announces the deal with Intracellular at $14.6 billion, and yet XBI doesn't budge. And if you go back to the prior Friday, before JPM started, in fact, XBI underperformed that day. And the reason being, the jobs report in the US came in stronger, which means it's inflationary, and which means that the 10-year, had moved higher. And so it's interesting how the XBI seems to be highly correlated to the 10-year treasury rate. And if I actually went back and looked at the correlation over the last 10 years between XBI and 10-year, and it feels like when you overlay both charts, starting in around 2021, you see an inverse relationship of 10-year to XBI. And, you know, it's just very interesting correlation. And I'm not sure if it's initially, I think it was okay, higher inflation, potentially higher rates would lead to more you know, greater financing costs or potentially lower DCF valuations. However, when you look at, I think, across the street, not a single analyst in their DCF values, when they calculate WACC, base it off the 10-year. It's based actually off an arbitrary perception on risk to the company. So if you look at a commercial stage company, you tend to see, you know, the WACC at around 10% or maybe slightly lower. If it's a early stage company, they tend to be higher at around 15 to 16%. So it feels like there's no correlation on the 10-year to DCFs, at least on analyst models. And then then one could say, well, okay, does it impact acquisition or deal flow? And I think, again, if you look at, let's say, 2018 and 2019, and the number of deals that we had in low 10-year interest rate environments, 24 deals in 2018, 29 deals in 2019, right? In 2022 and 2023, which are high interest rate environments, you had 43 deals and 38 deals. So a greater 50% greater volume in terms of deal flow, in terms of M&A. So then one will say, okay, well, Biren, that means you're not accounting for higher price deals north of 5 billion or 10 billion in value. Maybe those are impacted. Well, so again, going back to 2018, we had 2 deals that were north of 10 billion. In 2019, 4 deals. In 2022, 2 deals. In 2023, 4 deals. Last year, 0, right? That last year was the only year in the last, I could say, 7, 8 years where we had 0 deals north of $5 billion. And I don't think it's necessarily due to financing costs, because if that were the case, we would have seen a similar dynamic in 2022 and 2023. And also, you know, again, just a week ago or early this week, ITCI gets taken out. So I think, you know, there's more driving, I think, XBI, and what should be driving XBI is fundamentals and not the 10-year. And it feels like we need a decoupling of that. And so, like, we're getting strong fundamentals in terms of M&A, some strong data sets across phase 1 through phase 3 last year. For example, Alnylam with HELIOS-B was one big catalyst that actually hit, right? And we're getting active deal flow. So it feels like, you know, XBI is kind of stuck. And right now, how we perceive the market to be for 2025 is it's a stock picker's market, meaning not every biotech stock is going to go up. You know, in companies that execute on time and deliver strong data sets should be rewarded. And we think that that's, you know, likely going to reflect on the biotech market this year. So let me just pause there.
Any thoughts about others? Please feel free to chime in. That's pretty good a review. Thank you, Biren. Yeah, well, you guys are thinking probably have one quick reaction. So I picked up one word, Biren, from you. You said like a company will execute really well, gonna get rewarded. I recall a few years ago, you know, when you have a great idea, right? Sometimes you go to, you know, get an IPO, and sometimes you just jump up. So you are saying that kind of story is definitely out of fashion.
I don't think, and you saw this last year, we had, I think, 19 IPOs, 3/4 of them underperformed last year. And that's, I think, the other thing that's hurting the public markets is I think we need a better IPO environment where you have to flip the script. You have to have 3/4 of them actually working, right? Instead of 3/4 of them not working. And I think what we're getting from the class of 2024 are clinical stage, you know, many are clinical stage companies, but they're also, you know, somewhat in crowded markets. And so then that's where, you know, their assets have to differentiate to not just the standard of care, but the evolving competitive landscape. And I think, we're on one IPO that hopefully gets priced this quarter. It's not in a crowded market, and it's a huge TAM. And I'm going to be interested to see how that IPO does. And I think the valuation is reasonable. So those are all, I think, good formulas for success. And hopefully, every IPO this year kind of follows that script.
How about the existing company, which let's say have a very little EV, even huge negative EV? I mean, there's still have hundreds of them. What do you think the best strategy for them? Right? Sounds like they are not helping XBI overall. That's one of the they're contributing to the 3/3, as you said, which are not working.
That's a good question. And we've seen increased reverse mergers over the last few years, and that's clearly brought down the number of companies that are trading at cash or below cash. But I think you're right, Leon. I think we still have, quite a significant number of companies, and it's either they have to start delivering on their pipelines and the data, or they have to, pursue strategic initiatives. I think, there's one company a few weeks ago, I don't cover it, but IGM Biosciences, right? That was, I had IPO'd it when I was at my prior firm. And that was a hot company in 2019, 2020. In the antibody side, they were developing bispecifics. And I can tell you, I mean, they clearly have underperformed. And now I think the company said that they're discontinuing their autoimmune programs and are thinking about how to best utilize, the 180 million that they have on the balance sheet. Who knows? Maybe they'll go to China and bring in an asset. That's one option. Or a second option is, reverse merging into a private company.
Fantastic. I think that's a very natural transition to Fei. And now we are from the public market to private market. So just pick up a word like Biren left with. Can you just share with us what's your overview? What do you have seen from the private market?
Yeah, thank you, Leon. So I'll make maybe two observations. And then the first one is very related to what Biren's comment earlier about the public market. So at JP Morgan, mostly, probably 80% of my meetings were private meetings with either investors or strategics. And there's with investors, there's just a lot of talk about, are the mega rounds going to stay? Or are we going to see more of the traditional Series A, B, and C, right? And then that sentiment is very related to how investors feel about public markets versus M&A. And in general, my feeling is people feel a bit more optimistic about M&A in 2025 versus 2024, but less so about IPO market. So that's reflected in, the type of deals we saw in 2024, flurry of M&A partnership deals in 2024, but a lot of the IPO companies did not trade up. So with that sentiment, a lot of people feel like the mega rounds are going to stay. We're going to, the companies no longer need to raise additional funding. They don't need alternative financing before they can advance their lead assets to POC and sell directly to M&A. So there's that camp, but there's including our portfolio. But what would companies with less than 100 million initial funding? What's the route for these companies? But for what we saw last year, there were two examples in our portfolio with the companies with really strong assets. They were able to successfully raise. So Inmagene, for example, we got 175 million in cash to advance their OX40 asset. They recently released data. We're very excited about the data they generated. And VelaVigo, I believe that's your client, right? They raised a strong round of financing on top of a BD deal. So there are basically two camps. You can still do the smaller rounds, but these companies will probably be forced to enter earlier partnerships with partnerships and licensing deals with strategics. And then the ones with mega fund, they're out of market for a while, and hopefully they can sell. And then so the second observation is probably related to the panelists as well as the audience for this particular talk, is the buzzword China, right? I think a lot of us visited JP Morgan. Our initial impression is, hey, maybe this JP Morgan is less well attended overall, but if we go to China-related receptions, they're more crowded than the previous years. The Korean reception was very crowded. BFC, Bay Helix, BioCentury, they're all, the buzzword is China. So I got a lot of questions from investors around China, right? The questions are, what is China going to disrupt the traditional US venture model? Do we need these mega rounds anymore? Because if China can produce these assets at much cheaper cost, and why do we need to raise mega rounds, right? And then from strategics, there's questions around in 5 years or 10 years, will all early stage R&D being done in China? And that's a real question. And then how will China disrupt first-in-class drugs going forward? Why would anybody work on first-in-class drugs if Chinese company can genericize them in 6 to 12 months? And then as a lead to my panelists, I heard multiple times that they want to be the next Cancun for Candid. So those are the two general observations.
Oh, fantastic. I guess someone have to pick it up from there. Naveen, you work with the Candid Therapeutics. You were the initial mastermind of the whole thing. Probably start with some background story and share with us.
Yeah, no, sure. Thank you. Thanks, Leon and Faye. I don't know that I would take that much credit for that, but I certainly can share a little bit of the background on Candid. So, my group, Mira's Capital Life Sciences, we have strong connections in Asia, and we have 3 affiliates, that 2 in Korea, 1 in China. And when I joined the group in September of 2023, I knew that one of our strengths would be leveraging assets out of Asia, and created a list of targets that I was interested in pursuing. Among those were BCMA CD3s, or these bispecific antibodies and engagers in autoimmune disease. And this is prior to some of the work that had come out of Schett's work in Germany, and that resulted in one of my colleague who runs the China affiliate sharing a company that he was involved with called EpiMab. And this will go to more some of the comments when we get to the China east to west kind of topic. There are certain things in my view that certainly China is already very, very strong in, and has spent years developing, like antibody drug conjugates, bispecific engagers in the field of oncology. And what I really liked about EpiMab was, they had this unique technology, this unique construct that lowered CRS significantly relative to any of the approved agents on comparable efficacy, but significantly better tolerability and safety. And so it wasn't like a me better, and it was their own platform that they had designed and were experts in, and better than anything else that I had seen. So, basically took that to, Foresight, and we built a predecessor NewCo. Initially, the idea of having a BCMA CD3 NewCo that was clinical stage from oncology, but pivoting to autoimmune disease and getting clinical data off that. And that actually kind of exploded in a good way, and combined with Two River Third Rock, and they were working on a CD20, CD3 asset in autoimmune, and that formed a larger company. And Ken Song was interested in coming aboard, and he also had been looking at the space. And when we had these assets, came on board, and when he came on board, it really just like a rocket ship went off, and he has a testament to his reputation and what he's done in the past. A lot of investors came on, and it's one of the quickest fundraising I've ever seen, certainly in this market, where the Series B was done in like days while we were working on the Series A, and with all of that brought in over 370 million to fund this company. And as I'm sure many of you are aware, Ken has been busy at work, working on partnerships, on trispecifics and collaborations with EpiMab and Nona and other groups, really building a comprehensive pipeline here and doing really moving very fast. And I too, to what Faye's saying, heard about a lot of people mentioning, wanting to be like, Ken Song, or finding another candidate, and me too, right? and that's something where I spend a lot of my time trying to not necessarily, I don't think I'll be able to replicate that exact scenario, but finding assets out of Asia, which we'll talk about later, to build US newcos out of, which is I spend a significant amount of my time on. To answer some of the questions here about the private market sentiment, disease areas, platform versus assets, and the overall sentiment. So really, as using Candid as an example, the shift from oncology to autoimmune, we've seen IGM was mentioned, Cullinan and many others, that really any company that had a CD19 or CD20 or BCMA is really trying to develop these in autoimmune. And part of why we wanted to get ahead with these engagers with Candid was so we could be a dominant player in that space. And so that's definitely one of these areas. Obviously, I don't need to mention CV metabolism and obesity to a lot of the folks here that are well aware of that. But within that, I think there's a sentiment of orals, certainly small molecules on the CV metabolism side, and obviously. We have Weiyong from Hanso here on the call. Weiyong can, I'm sure, talk about that, and obviously many others. So looked at many of the small molecules, and then there's many others on the injectable side among the incretin class, and then the non-incretin class. So there's certainly been a big push towards those areas. I think there's still obviously an interest in oncology, and there always is. We've seen that with IDRx and Scorpion, right, with the JP Morgan news for those companies, and we continue to look in that space. And I spent a considerable amount of my time meeting with, I'd say among all the companies I met with, about half were from China companies at JP Morgan. And many of those were looking at ADCs or bispecifics in the field of oncology, where I know that there's a significant strength there, and they develop their own platforms, which make them very much best in class in certain cases. And then on the topic of platform versus asset specific, I think we're in 2020, 2021. Maybe that was more platform-based, but certainly now, at least what I see, is a lot more asset-centric. And, a lot of the companies, including our portfolio companies, are doing everything they can to cost conserve and further develop their assets as far as possible, knowing that the IPO market hasn't been the warmest, certainly in 2024. Hopefully, I think people are expecting or hoping that'll be a little bit better in 2025. I think there are people that are hopeful about the FTC, changes in the FTC with the political change, and perhaps an M&A market that's a little bit that's picking up. But realizing that pharmas and those acquirers have the liberty to wait until some of these are the assets are further de-risked. And so I think a lot of the private companies are trying to do whatever they can to cost conserve, including using virtual CRO models and actually working on a very lean team here in the US and outsourcing a lot of that overseas, and really trying to do in the most cost-efficient fashion, getting to relevant inflection points. So that's with our portfolio companies, Candid being one, and another called Xing Therapeutics, that certainly is very cost conscious, and has one program in oncology that's already in the clinic and dosed, and another one shortly after. And so that's something that we're seeing with asset focused companies. And when I look to do a new build in the US, it's very much looking at what that lead asset looks like, and how close to the clinic is that. I think if it's pre-DC, it gets really hard, and obviously the ideal is having some clinical data to do that, and then so those are some of the things that I'm certainly seeing. I think neuroscience, J&J just announced that deal at JPM. I think that there's certainly some renewed interest, but I think there's also some skepticism when you look at the neuropsych side and MDD and some of the failures there. So I think for us, the bar is pretty high, but I have a background in neuroscience, and so that area is also near and dear to me. So we certainly look at that as part of our fund. And also hopeful on genetic diseases and things like RNA modalities or epigenetic modalities, or things like oligos outside the liver are high interest to us. So I think those are also things that we see certainly of interest out there in companies built around that. So maybe I'll pause there and see if there's anything else anyone else wants to add.
That's really good review, Faye and Naveen. Thank you very much. I think honestly, you guys don't need me. I feel like you just make a perfect segue for next speaker. You already killed Weiyong about his oral GLP-1. So Weiyong, I know you are kind of a really active work in this east to west deal making space. I just want to give a shout out. You are not out licensing Chinese asset to the Western company. You are also in licensing Western asset to China market. So you are kind of a both way. You said both way traffic. So please, as one of the major deal makers in the space, what's your observation?
Thank you. So my God, I feel it's so difficult to be the last panelist because my fellow panelists have already covered everywhere so well. But let me give my 2 cents. For the JP Morgan meeting before 2024, most of my meetings were with MNCs or biotech companies. And this year, at least 1/3 of my meetings were with investors for new co-creation. And in case of new co-creation, so investment syndicate and a management team, come together with a Chinese company and to form a new US or Europe-based biotech companies. So Henry and Hercules is a very good example of the new co-partnership. We are also very interested in this business model, although we have not done the new co-creation yet. So for single, assets, we prefer to do the traditional out-licensing deal, especially with MNCs. So in 2023, and we licensed out 2 ADCs to GSK. Last month, we did the small molecule GLP-1 deal with Merck and got more than $100 million upfront payment. And so since Hansoh has so many, programs across different therapeutic areas, we are also in discussions with investors to bundle some of our programs in the same therapeutic area and create a new co. So Hansoh has a very small BD team, and it is not efficient to do single asset, deal one by one. And regarding the modalities, and as Naveen already mentioned, in 2023 and 2024 were ADCs. So this year, I saw a lot of interest, from MNCs and investors on bispecific antibody, and including the T-cell engager, and also like the SRA. Those are like the hot modality. For the big indications, especially in the cardiovascular and the metabolic disease area, and the small molecule has its advantage, especially for the target, which has already been validated by antibody and injectable peptides. So let me pause here.
Yeah, fantastic. By the way, there's a question from the audience. It's exactly about your GLP-1 oral or small molecules assay. So this is from Han Gero Therapeutics. Pretty much the question is Pfizer GLP-1 small molecule. I believe he's referring to danuglipron. Drug demonstrated liver toxicity. Is this toxicity specific to the compound, or is it common to the 2 primary compound structures? Additionally, which structures serve as a basis for Hansoh's GLP-1 small molecules? You can choose, if it's confidential, you don't have obligation to answer, but that's a question, and they will identify the company already.
So we have not disclosed the chemical structure of 535, which is the preclinical asset we licensed out to Merck. So that is confidential information that I cannot comment. Besides 535, we also have the oral GLP-1 501 in phase 1 stage. So we are also actually looking for partners regarding this asset. So to answer the question, I do not, believe the liver tox is a scaffold base. It's more like a compound base.
Fantastic. I think that's a really get into like deeper and more exciting now. And so any other thoughts before we move on to the next question, the cross-border BD transaction?
I'll just make a follow-on comment on the therapeutics. You know, there's an observation that there's not a lot of correlation between what's hot and what's approvable, right? So I think Weiyong made an earlier comment that, you know, ADC was really hot in the last JP Morgan. But if you look at what's approved, I don't think there was a single ADC approved this year. And then, you know, definitely bispecific and TCEs are, you know, what's really hot this year. Also I&I is really hot this year. But if you look at kind of approved drugs, there's an increase of probably 18 oncology assets approved this year, but there's a decrease of approvable drug, probably 3 only this year in autoimmune disease. And then, you know, I think bispecifics are just proving out it themselves as a modality with Amgen's Tarla and things. So not there's a you know, kind of a clear correlation. Maybe it takes a few years. So in terms of, you know, what it really think it comes in waves. So if you think it's hot now, and then as investors, let's get in now, it might not be the best decision. And then just echo on Scorpion as well as IDRx deals. You know, I think last year there's a lot of hesitation from the investors on precision oncology, right? It's due to IRA and due to and also a small molecule. But you know, this year I think these 2 deals are great. They gave a lot, you know, hope to companies working on small molecule precision oncology. So I think let's really go back to fundamentals and look at unmet needs and things.
I think that's a really nice, you know, entry into the next question. What's the hard areas and the modalities? I mean, if you guys first share your observation, this is open to all the panel. After observation, if you can share your thoughts, what's a you know, kind of first principle reason behind those observations? That'll be very helpful. So probably whoever want to take a first try, the hard areas, modality you have seen, and why do you think that's a reason?
Well, I think you know, certain hot areas. So bispecific engagers. You know, I think I can certainly, well, again, not to bring up Candid again, but when we're thinking about you know, autoimmune disease, for example, like using that as an example, and you think about penetration to secondary lymphoid tissues and you know, failure of some of the early monoclonal antibodies, then you have CAR-T approaches, right, that are trying to do that. And so with CAR-T approaches, there's obviously complexity in manufacturing and scalability, cost, et cetera. And if you're dealing with autoimmune disease, ex vivo CAR-T that require lymphodepletion, I feel like you've already lost the game on these types of patients, right? These are not oncology patients if you're going after the autoimmune disease space. So then you're really left with the in vivo CAR-T approaches, which can be quite complicated and require a lot of elements, and there's less data for those, right? And so with bispecific engagers, I think as a modality, when you think about scalability, you know, some of the, I guess, concerns early on would be toxicity, CRS and ICANS, things like that. And so when you see the penetration of these molecules, of these bispecific engagers, and you can see that they actually get into these secondary lymphoid tissues, and you can see that some of these actually have made modifications through the evolution of these engagers for affinity, whether it's affinity maturation, right, of certain of one of those arms, can really significantly reduce toxicities. And so that was the opportunity that certainly we saw, that you know, for us, making a bet in these bispecific engagers, which I think, and my larger point here being, I think bispecific engagers and bispecific antibodies are a much hotter, or certainly are a hot area. And because there have been modifications, and I'll make the same case around ADCs in just a minute. these modifications and evolution over time that have really gone to significantly reduce toxicities. And I give an example on, let's say, for example, with a bispecific engager, how you, the affinity maturation and affinity testing of the CD3 arm, right? And sterically, how you're organizing that CD3 arm can make big differences. And so going from early engagers that had significant CRS and, toxicities, to now, where some cases you're not seeing any ICANS, you're not seeing anything higher than a grade 1 or maybe grade 2 CRS in some patients, and that's a significant improvement that's enabling the modality with ADCs. 40 plus years of development, right, and not that many approvals, right, which was just commented on. So. And not a lot of innovation around the payload, but there's been a lot of changes on the conjugation technologies, the linker technologies, and to that end, kind of restricting payload release to the TME and reducing off-target tox. There have been significant changes there that have enabled the modality, and what we're seeing with that is even multi payloads, so dual, triple, bispecific ADCs and things like that. And there's technologies that many of the companies in China that I could talk about that they're doing to restricting that, as I said, off targets to just acting externally in the TME to still enable bystander effect while also acting on the tumor cells themselves. So these modalities that have certainly evolved over time are becoming very attractive, and certainly with IRA, the way it currently is, there may be a benefit to acting on larger molecules, now, but that of course could change, and that's a separate conversation about how politics may affect the small molecule versus biologic 9 to 13 years. But I think that those modalities, certainly from my purview, have seen a lot, certainly evolution over time, and there's certainly a high level of interest. So I'll pause there.
So regarding the therapeutic areas, besides oncology, metabolic disease, immunology, which we already mentioned, surprisingly, this year I saw a lot of investors, coming to us to chase our CNS pipeline. So CNS area has been a very difficult area because how to control the placebo effect is always a headache for clinical trial design. And I think the reason might be, first, this is a huge there is a huge unmet medical needs in this area, and also because the relatively friendly, regulatory environment, because recently we saw FDA approved, some of the Alzheimer drug, Alzheimer disease drugs, although there is still debate whether those drugs should be approved or not. Yeah.
That's a very good point. So I just want to add one color. I bumped into by accident into a law firm sponsored event by DOP Piper. They invite one of the executive from pharma, the larger lobby group. I believe her first name Lori, and she said right now the pharma lobby group squarely focus on trying to remove the 9-year restriction for small molecule. That would be interesting if they really succeed. They used to have a pretty good track record. If they really made that happen, that would be changing what we right now talk about. Small molecules somehow become a less preferred to biologic, not even mention gene and cell therapy, which will never kind of go out of pattern or go out of kind of a regulation, especially rare disease. So that's another thing. I think one thing I learned is the disease area. We have oncology, and obesity / metabolic diseases, and sounds like a CNS also there. Between the modality, small molecule, and the large molecule / CGT, probably something going to change, hopefully. I mean, it looks like it's going to be really dynamic, really kind of feels like it changes only on change the factor in 2025 and beyond. Anything else before we move down to next topic?
One real quick thing maybe I'll add is, when I talk about ADCs, I think most people just assume oncology, right, with cytotoxic payloads. I think for us, when we launched, I had a PowerPoint deck with all the interest areas that we have, and I have ADCs listed for every core sector and that we're interested in, including oncology, immunology, including genetic disease. And what I mean by that is using ADCs as a very site-specific way to deliver a payload that's not just cytotoxic payloads, but we're seeing some companies that are in immunology, delivering, whether it's steroids or other types of payloads, or think of the potential for delivering oligonucleotides in genetic disease, right, as a delivery tool. So that's an area that we look at quite a bit. I wouldn't say there's huge, maybe not as big interest right now, but it's certainly something on the horizon that we're paying close attention to and very interested in. So I'll also mention that ADCs, like technology like ADCs outside of oncology.
Fantastic. Now let's get into one of those kind of probably a little bit controversial topic, the China to West deal flow. Obviously, let me share one slide as a kind of conversation starter. And before getting to JP Morgan, there's some interesting 2024 full year deal flow analysis done actually by my own company in Science We Trust Bio Advisory, I3 Bio Advisory. Honestly, when I first saw the data, I was surprised. Everyone talk about the US being like a really best capitalized market, that's so active, will have a lot of money. You would assume the US company going to spend most money on getting a Chinese asset. Actually, it's not. 2024, if you look at the deal, the number, by the way, little bit caveat, I wouldn't count the deal which had disclosed upfront payment cash, right? We want a real cash. Don't tell me about box. That's kind of a little bit, stretched. Let's just look at the real cash or pre-money equity, right? Put them together, get us a number. And out of this 48 deals met those criteria. As you can see, European company pretty much closed as slightly one more deal than China, than US company. Now you put all those cash together, actually European company outspend the US company. That's quite interesting. And also induce a little bit discussion. This is my best conversation starter when I try to approach two people. And JP Morgan's like, I always ask him, can you guess who spend more, the Europeans or the Americans on Chinese asset? So I stop right here. Probably first, this again as a conversation starter. Obviously, another thing we know, we're talking about mega round before JP Morgan. There were 4 mega round, and 3 of them were based on Chinese asset, including the largest Series A, which is Verdiva. That's also interesting if you look at that one. That was a UK-based company, serial entrepreneur, Kuram Farag, used to get the asset from Henry and sold to GSK. The team executives did this again. And the interesting thing is that there are 2 leading investors. The first one is a Forbion, which is a Dutch-based fund. Second one is General Atlantic. So Chinese asset, UK team, half money leading investor, one from Europe, the other from the US. So that's 2 pieces of information. I know, please feel free, share your first reaction. And what do you think beneath those kind of quite interesting observations?
Well, the European ones, pharma companies mostly, Leon, and when you're comparing the US ones, like, is that where a lot of that European money is coming from when you're counting the pharma groups that are headquartered in Europe versus US, and is that, how much of that does that play a role?
So actually, funny thing is that the several big spender from Europe is not necessarily pharma companies, mid-sized biotech. Remember, Genmab acquired Profound 1.8 billion, and BioNTech acquired BioVerse almost 1 billion. That's 2 biggest purchase, and a bunch of others. GSK also spent 300 million. You are involved, I'm pretty sure. You kind of also heard about it. GSK spent 300 million, get the tri-specific T-cell engager from Inmagene. So that's pretty much the top 3, purchase deals, with the European-based company. So 2 mid-sized biotech and 1 big pharma.
To be honest, I think most people don't know what to make of this China phenomenon at this point. There's a lot of talk, discussions, and some anxiety. Because just last JP Morgan, the sentiment was completely different. Nobody wanted to talk to Chinese companies, and with the exception of a few, maybe like the Mir assets. But this year, everyone did, right? But so it's a drastic switch, and people. On one hand, there's the Biosecure Act, and then what would the US government do? On the other hand, hey, if we don't do something, Europe will do it, right? And then pharmas, apparently, or funds apparently don't care about what the government thinks about this innovation. If we don't do something about it, it's, we are behind. So, we have to do something with China in mind. But how will China play a role in the whole R&D ecosystem? That's up for discussion, anywhere from, okay, let's form a new co, let's have, new assets, but recruit teams in China to develop this, to, hey, maybe, the entire R&D will be there. So there's just a lot of discussions. And I think people are still trying to understand how it's going to impact the ecosystem.
So Leon, since you mentioned the BioNTech biosys deal, so personally, I really want to see more Chinese biotech companies to be fully acquired by overseas partner. The Greece cell AZ deal was announced before 2024 JPM and completed immediately after it. The BioNTech to acquire biosys was announced I believe last November, and they are still in the closing process. Actually, Hansoh did 2 deals with biosys. One is we licensed the Greater China right of their CMET EGFR bispecific antibody. The other one was last March. We licensed the same antibody to do ADC, and this one we have the global right. So this kind of acquisition and also give us opportunity to work with BioNTech directly. So we need more M&As. It will provide investors immediate exit and more confidence in Chinese biotech.
Yeah, totally agree. I just want to point it out, if you just speaking from legal perspective, big pharma in the US have not acquired China, legally Chinese company yet, but they did have done a few, I call it kind of technically it is M&A, but they structure as a asset acquisition, right? We know quite a few. Merck acquired Curvan's CD19, arguably the best-in-class T-cell engager, $700 million upfront, $600 million milestone. And also Merck did it again with Lenovo, acquired their PD-1 VEGF. That's like a $588 million, and a bunch of $100 million milestone. The deal structure with those, for me, it just looks like M&A. If you just remove the word compared to, let's say, the deal Merck did with the Curvan, what's the difference between that one and what Lilly did with the Scorpion? Right, Scorpion also have up to 2.5 billion total value. I don't know how much it really got, but there's some milestone. And then Centerview did something quite creative, right? They took the lead asset from Scorpion and threw out all those early stage asset for a new company. I mean, in the end, that's exactly what Curvan or Lenovo end up with, right? Their most attractive assets gone, and the pharma give them a lot of money, and they keep their pipeline, keep their people, get a lot of cash, right? Just have a different turn. So actually, Biren, you are a public market analyst. For me as a deal maker, if I follow the money and follow the final, who say there, who is the boss afterwards, I feel the same. But one is called asset acquisition, another is M&A. What's your view?
I agree. I think they would be considered asset acquisitions. That's how I saw them as well. And I think, we're going to continue to see that. And part of it is I think a function of the fact that if you look at loss of expiration just for US sales between now and end of decade, I'm not talking about IRA negotiations or anything else, but simply loss of expirations in the US between now and end of decade. I think we calculated close to $150 billion in sales that pharma has to somehow generate from either internal innovation or external. And that's why you're seeing companies becoming more aggressive with external innovation, especially China.
And on top of that comment, for pharma to make up that much revenue and sales, they need to purchase. And where do they purchase? Are they going to break their own balance sheet if they, purchase everything and from US companies, or are they going to go cheap, right? Going to generic and from China. So we'll see.
Yeah,
Very,
so
like-
go
Sorry.
ahead, Naveen, please.
I was going to say there's two interesting things that I noticed, with the East to West. So one is, I think I referenced this earlier, where there are certain fields where I feel like, and I'm using China as kind of example, but certainly this can include other countries, where they've spent a lot of time in oncology, right? So we know like platforms that they've developed on ADCs that are unique and homegrown. And then from my experience, when you look at like obesity and incretin class, there's a lot of these me betters, right? And so you see a lot of these Danu scaffolds. And to the question earlier to ask to Weiyong, I have the same question, right? Because the ortho scaffold is a lot more challenging, right? More chiral centers, it's a more complex scaffold. The Danu scaffold is used more commonly to try and iterate off of. And so you see a lot of, chemists that are in companies that are quickly iterating off of that. And I kind of know that going into it, right? So I can almost know if I'm looking at a small molecule GLP-1 RA, that this is going to be a Danu scaffold with some sort of chemistry improvement. And, trying to then decipher, okay, is it something meaningful? But I don't mean to generalize, say that's the only thing out there. It's just when you look at the difference from my perspective in oncology companies, and I'm also, pivoting oncology to immunology versus a lot of these incretins, there is, it seems like, there's so much more time has been spent building platforms in oncology and then pivoting to immunology for similar assets versus something like incretins. And so there are companies, Mirador, where I think the CEO is recently saying they're not revealing anything because they don't want to. They know how quickly that groups in Asia can build these compounds off of patents or papers or conference presentations. And so one interesting thing to note is like there are companies like that don't want to reveal anything anymore because they'll me better will pop up immediately, and then that'll form a newco with $100 million or higher, and then they'll be well funded and have competition. So it's an interesting dynamic that is occurring with the me betters and fear from U.S. companies, and also other disease areas where there's been more homegrown differentiated platforms. The other interesting thing is in some of my meetings with China companies in JPM, there's some folks that that want the upfronts, right? They see these upfronts and they want $400 million raises themselves and things like that. And they don't, and others that see more value in equity. And so when you're forming a newco, right, there's typically the way that we do it with venture capital side is you offer some equity. I'm not generalizing to say every single time, but that's typically like a term sheet with a lower upfront that a pharma would give with the benefit and potential upside of equity in a newco, right? And it's just an interesting difference that I noticed where some of these groups just want upfront. They want a lot of money, and a lot of it depends on where that company is financially. And others, are much more receptive to involvement in a newco and equity ownership for understanding it's a little bit lower. It could be lower up front, but the potential, money overall could be greater. And also there are companies that just see the $400 million raises and they want that for their own assets. And I tell them, like, it's very much dependent on the type of asset, the stage of asset, how hot it is. And usually those $400 million raises using, Kylera, Hercules, those are multiple assets, right? They're usually centered around one clinical stage asset in a very hot area, but usually go along with some other assets. So, those are not, while we're talking about mega rounds and things like that, but I don't, it's not as easy to do those. And I think the right groups need to come together around the right assets. So I'll pause there, but those are just some interesting, observations I've had about the East to West.
Yeah, probably gonna add like two colors. The first one, as probably a lot of people before you went to JP Morgan, read the famous Stifel 2024 review article. There's a few pages under the section called the China Dynamics. I recommend everyone read that part. There was found some quote from Peter Koczynski from R Capital was fascinating. I said Naveen is nodding. So pretty much Peter's idea is, if you are truly the first-in-class company, we're gonna invest in you. If you just do fast follow, we're gonna do a mega round, go China, fund a bunch of assets, like people did with the Verdiva, right? It's obviously hard, it's a M&A target. It's much more capital efficient, much faster. So it looks like there's like two major theses for the US-based or European-based large, I would say biotech PE VC fund. You do first in class like a Mirado, like you mentioned, hide yourself until when you come out, you already have like, I don't know, phase 1, phase 2 asset with a really great data, you already kind of a half-year fund IPO or a good acquisition. Or you just want to fast follow drifting, there's someone already made a breakthrough. That actually go back to another interesting quote from Umar Wafa from Evercore. Last year, he did a West Coast VC tour. That's so funny. He talked to every major VC fund in Europe, on West Coast. Every fund told me, right now, before we invest in any company, any asset, we boil the Chinese Ocean, make sure there's no other three, just 1 year behind us. And that's how I got a job, by the way. They really want to make sure there's no hidden, because in China, a lot of assets were not listed. It's not listed. And all of a sudden, like for example, if you just look in the public space, you would never have found so many T-cell engager. Now all of a sudden popped out left and right, some of them just like half a year away from the clinic. So I think the way how the US-based fund, European-based fund to invest in new opportunity also need to change. Before, a lot of people told me when they do due diligence, competitive landscape, they didn't even include China. So, wow, those people are not really innovative enough. Now, I guess you have to. If you don't, you're going to get a school probably big time. So I'll stop right there. And also there's one question specifically from my friend Li Huazhen. I mean, this guy just did a reverse merger for his former company, actually on Hearts with the innovation. Now he's running a new company. His question is, any restriction of any kind, business, legal, operation, etc., for China-based USD fund joining US fund-led syndicate for new co-creation? Very specific, really legal stuff. Pretty much like, the Chinese run US fund, would they get along with the Naveen you? I think Fei, you can also like comment, right? Actually, you kind of fading both identity. So please, you two, if you can share some view, that would be great.
Well, we have run into cases where China-based US fund have been excluded from the board due to CFIUS. So it's what defines as China. It's kind of can be ambiguous, and then I think most of the China funds, a lot of China funds have US dollar component, so it really looks at your LP and kind of the owner of this fund.
Yes. So when we invest, we're US based and regulated as a US entity by the SEC. Now, given our investors for Fund 1, we still require CFIUS carve-outs when we invest in a deal, whether that's a syndicated deal or a new co-creation. For what we've done historically with new co-creation, we actually have had, now this is more, we have had a China company have board involvement, and certainly be investors in a new co. Now, of course, you need CFIUS carve-outs, and China is very different from Korea or other countries when you think about competitive threats or geopolitical considerations. But I'm probably not the best person to answer from because we're a US-based group, but certainly we still do the CFIUS carve-outs. I have to imagine that for some China-based VCs maybe a little bit tougher. But all I can say is that certainly for the new co-creations historically, we have had a China-based company have board representation and had the appropriate language to cover that. And there wasn't concern from the investors involved. But yeah, I think it's kind of, at least from my experience, kind of can be a case-by-case basis depending on the deal and the investors and their fears and geopolitical tensions.
Any other comments before we move on to the very last question, the forecast of the future? No more? Okay, the last question, what's your forecast for M&A, IPO, BD licensing, and obviously China trade in 2025 and beyond? Probably start with the largest market, public market. Biren, do you want to get it started?
Yeah, I think for M&A, I think we probably see numbers like we saw last year in the low to mid 40s. And clearly we've already exceeded last year in terms of the high volume M&A deal, right, with Intracellular. So we're already off to a really good start there. I think that will continue. And as I mentioned, the LOE is one driver. The other driver is, changes in IRA Medicare Part D rules, which are starting to impact companies this year. In fact, Pfizer a few weeks ago provided their guidance, and they have said that they're going to see a $1 billion in revenue impact from, IRA Part D rules, specifically not the negotiation, but, rule changes around how Medicare reimburses for Part D drugs. So I think that likely helps drive, a lot of M&A and a lot of BD deals. As it relates to IPO, I'm hopeful, Leon. I think that I'd like to get into the 20s as far as IPOs with good quality IPOs that work. And I think if we get that, then that sets it up for a much stronger 2026. So let's see where we get to. And I think investors and companies are mindful of valuations. And you're seeing, companies with clinical stage assets with proof of concept, proof of efficacy already established. And hopefully that helps, drive strong fundamentals for the IPO landscape.
Fantastic. I'm gonna go from left to right. Next one, Faye. What do you think?
Very much agree with Biren. I think from the strategic perspective, that definitely are looking for de-risk assets, but the question is, valuation and how many you can find. So, our estimate is there will be still more partnership and licensing deals this coming year, and a lot of them going to China. So on the financing side, 2024 was not a great year from financing perspective for China-based companies, and hopefully 2025 riding off of this large number of partnerships, there would be more private financing for China-based companies. So we're optimistic.
Great. Naveen, what's your crystal ball? Crystal ball tells you.
Oh, sorry. Yeah, so I mean, I touched upon this before because I think that the IPO market, people hope. We've seen some companies already start to consider filing S1s and things like that. So I think that I don't know how much worse it can be than 2024. So I certainly hope it's better. M&A market, I think, I don't see why would not continue to be, stronger. And I think that you've heard from a lot of the pharma companies at JPMorgan and others that some, they may not be looking to as huge deals, but they're certainly looking to help build their own portfolios with assets. So I think that will continue. The East to West will definitely, I think, continue, and that will be a strong component. As we talked about earlier, the speed at which they're able to develop high quality molecules is something that you can't ignore. And so we'll see more of those. As I said, I've gone from wanting to spend some time on it to spending every week talking to VCs and companies in China multiple days a week to try and find some of these assets that can form newcos out of. So I definitely think it will be a strong driver going forward. So yeah, I think on the term mega rounds, I think that depending on how you define mega, they will continue because you need to fund to certain inflection points, and days of funding and trying to go public off of DC or preclinical data is tough, right? And you certainly want to fund to proof of concept clinical data, and that could mean expansion cohorts or and being able to fund that early on requires a lot of capital. So I do think that you're going to see those come together, and that's what I think will happen in 2025. And I think that we're all hopeful that XBI in the market will pick up.
Wonderful. Weiyong, you probably you have a most to sell, you have a lot to buy. What's your forecast?
So I saw a lot of MNCs are hiring search evaluation BD person in China, to look for innovations, and among them, at least 1/3, have already done deals with a Chinese company. So the day we announced the Merck deal, and Weiyong stock price dropped a lot. If the Chinese company can provide the high quality asset at a more reasonable price, I do believe this kind of either licensing deal or new co-creation or M&A will increase. At Hansoh, our R&D colleagues in China are really working very hard in a very cost-efficient way. We do believe that we can provide the high-quality asset to MNCs and the US and Europe-based investors. At the end, it will benefit the patient worldwide.
We'll say I will provide my philosophical view on this. I actually wrote a post. And the pretty much idea is that, of course, there's some kind of a struggle, distressed US public biotech really suffer. Even some like a high flying one, like you mentioned, Structure Therapeutic and Viking, they're treated down because your news with Merck. And some of the others, like fast follow stories on the street, on NASDAQ, even worse. That's why a lot of people actually say, the US government going to ban the China to US deal flow. But I want to point one thing. I would say the cornerstone company in our industry are those big pharmas, and they are in probably the biggest challenge for decades, right? I read somewhere, Naveen mentioned or Feng mentioned, and also Biren mentioned $140 billion revenue hole in the US, but globally I heard it's about 400 billion. If it's 400 billion, you cannot spend 10 billion to get a phase 1 Juno. Their balance sheet gonna broken. They're gonna suffer. Let's say, imagine if the pharma, half of them disappear. How would we biotech and the biotech investors survive? I think right now we should step back a little bit. I think there's a biopharma and biotech and investor symbiosis system is so important rather than actually living on crisis. We cannot just think about a biotech, you should maximize the value, squeeze all the milk out of the big pharma cow, even have a drop of blood, that's okay. If they suffer, the whole industry can suffer. That's how I view this. They have way more money. To be honest, a lot of obesity, chronic diseases, biotech just cannot handle it. Give your best asset, you cannot make a best use of it. You cannot extract the most value out of it. You need big pharma. And they cannot continue to overpay so much. Probably that's my Eastern philosophy. I don't want to just about me, right? I think about everyone. So that's my view. The big pharma, biotech investor right now should work together, right? Make sure the innovative drug industry really survive and thrive, and all the patients, just like Weiyong said, in the world, probably start with a patient from a Western country, and that everybody around the world going to benefit. That's my 2 cents. Anything else? If I say something, really horribly wrong, please correct me. Okay, so now I guess that's the end of it. But before we go, I actually do have some quick shout out for our future webinar. We already did the Q&A, but so we can skip this part. But I'm gonna pause probably 5 seconds if you really want to know what this QR code really about. They bring you to our website, the iSuite community, which is a nonprofit, really started this whole thing. This is exciting stuff. Today we're talking about how T-cell engager has been making kind of a headline left and right, but so next BioVerse webinar actually is a joint venture between IO360 and BioVerse, and we have all those Durand movers, pretty much all the key stakeholders in this kind of a space. No one stranger to Centerview. John's Day have involved a lot of cross-border transactions, including Legend and J&J. They built a IP estate for that. Merck, as you know, probably the busiest last year, including the one with Hudson. I should thank you, Weiyong, for recommending Grace to me. Cindy, Naveen, you must know her very well. You work together. And of course, moderator going to be me and Axel Hoos. Because who is Axel Hoos? He was a founding CEO of Scorpion, which was just acquired by Eli Lilly, 2.5 billion up to value, and a few days ago. So this is going to be a fantastic webinar. Please click on the website or Google it and register it, and you're going to not be disappointed. And finally, we are a nonprofit. We ask for our companies really help us step up, help us sponsor the future event. As you can see, this is very influential. You can have a great exposure to the high quality audience. So please contact us. The email is on the button. Send us an email, talk to us, and please help us. Let's grow the community together. So in the end, investor, biotech, biopharma, most important patient gonna benefit, gonna thank you. With that being said, thank you very much for our speakers. That's a fantastic review of JPMorgan 2025. Really appreciate that. And for those who missed this, this replay can be on our YouTube channel. Hopefully today, no later than tomorrow. And the summary of this webinar can be posted, including our newsletter, which will publish in this the coming Sunday morning at 8 a.m. Please subscribe as well. With that being said, thank you very much. Enjoy your day and see you on JPMorgan 2026.
Thank you.
Thank you.
Thank you.
Thank you.
Thank you.